Hey everyone, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today, we're shining our spotlight on a specific ticker that's caught our attention, BOXL Corporation. This company has landed on our screener with some truly remarkable metrics, and we're going to break down exactly what makes it stand out. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's kick things off with a quick profile of BOXL Corporation, ticker symbol BOXL. Logo/stock chart. This company operates in the technology and consumer electronics sector, designing, producing, and distributing interactive technology solutions. Think interactive flat panel displays for classrooms, healthcare, corporate offices, and even military and government sectors across the Americas, Europe, and beyond. With a current market cap of just $5.01 million, BOXL is firmly in microcap territory. Looking at its recent price action, BOXL closed today up a respectable plus 4.85%, which is a nice bounce, especially after a minus 3.81% dip over the last 5 days. However, zoom out a bit and you'll see a significant move. The stock is up an impressive plus 62.80% over the last 30 days. Volume today was 466,600 shares, which is notably lower than its 30-day average volume of 2,640,820 shares, giving it a relative volume of just 0.2x today. Highlight volume bars. What is cost to borrow and why it matters? Now, let's talk about why BOXL is on our radar. It comes down to something called the cost to borrow, or CTB. Show CTB explanation graphic. When you short a stock, you're essentially borrowing shares from a broker, selling them, and hoping to buy them back later at a lower price for profit. But borrowing those shares isn't free. You pay a fee, typically expressed as an annualized percentage. This cost to borrow fee is a crucial indicator. A very high CTB means one of two things: either there's extremely high demand from short sellers to borrow those shares, or, more commonly, the supply of shares available to borrow is incredibly limited. When the supply dwindles, the price to borrow them skyrockets. It can even exceed 100% annually because the fee is often calculated and paid daily, reflecting real-time market scarcity. Why this stock is hard to borrow right now? For BOXL, the numbers are truly eye-popping. Our data shows an annualized cost to borrow fee of a staggering 952.4%. Display 952.4% prominently. That's almost 10 times the stock's value just to hold a short position for a year. This immediately flags BOXL as a hard-to-borrow stock. With an estimated float of only 0.5 million shares, that's 500,000 shares available for public trading, the supply is already very tight. When short sellers are lining up for such a limited pool of shares, that borrower fee naturally explodes. We don't have data on the exact number of shares currently available to borrow, but with a CTB this high, it's safe to assume they are scarce. Our internal composite squeeze score, which combines factors like CTB, float size, and price momentum, currently sits at 41.0 for BOXL, indicating a developing but not yet critical setup. Squeeze mechanics explained. So, what does a high cost to borrow potentially lead to? A short squeeze. Show short squeeze explanation animation. Imagine you've borrowed BOXL shares at a high CTB expecting the price to drop. But instead, the price starts to rise. As the stock climbs, your losses mount, and that nearly 952% annualized borrower fee keeps ticking up daily. At some point, the pressure becomes too great. Short sellers are forced to buy back the shares they borrowed to close their positions and stop the bleeding. This buying activity, especially when many short sellers are doing it simultaneously, creates a surge in demand, pushing the stock price even higher, which then forces more short sellers to cover, creating a self-reinforcing upward spiral that's a short squeeze. It's important to note, though, that a high CTB does not guarantee a squeeze. It can also mean short sellers have very strong conviction that the stock will eventually go down and are willing to pay a premium to stay short. Dilution risk check. Before getting excited, we always check for dilution risk. Dilution occurs when a company issues new shares, increasing the total number outstanding and often depressing the stock price. This can completely negate a short squeeze thesis, even with high borrow fees, because new shares flood the market, providing liquidity for short sellers to cover and reducing upward price pressure. Good news for BOXL, our check found no recent dilutive SEC filings like S-1s, S-3s, or 424 BS in the last 90 days. This means there's no immediate overt dilution threat from the company itself on the horizon. Recent reverse split watch. Another important factor for BOXL is its recent reverse stock split. On June 22, 2026, which was about 57 days ago, BOXL executed a 1-4-6 reverse split. Show reverse split explanation. A reverse split reduces the number of outstanding shares and proportionately increases the share price. So, for every 6 shares you owned, you now have 1, but that 1 share is theoretically worth 6 times as much. Crucially, a reverse split significantly reduces the total float in BOXL's case, helping to bring it down to the 0.5 million shares we discussed. Historically, many microcap stocks tend to see renewed volatility or a price pop within about a month after a reverse split, as the share count is reset and interest might briefly return. While BOXL's split was 57 days ago, slightly outside that typical 1-month window, the reduced float is a permanent factor contributing to its hard-to-borrow status. Again, please remember, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, if you're watching BOXL, what should you keep an eye on? Show checklist graphic. 1. Cost to borrow. See if that 952.4% CTB rate remains elevated or climbs even higher. 2. Borrow supply. A further decrease in available shares to borrow would be a strong indicator of increasing pressure. 3. Volume. BOXL's relative volume today was only 0.2x its average. A significant increase in daily volume, especially coupled with price appreciation, is often needed to trigger and sustain a squeeze. 4. Price action. Watch for continued upward momentum and the stock holding key technical levels. 5. Small float. That 0.5 million share float means any significant buying pressure can have a magnified effect. BOXL Corporation. BOXL presents a fascinating case with its extremely high cost to borrow and tiny float, making it a compelling stock to watch on our hard-to-borrow screener. Remember, while the metrics suggest a potential for volatility, trading microcap stocks, especially those with high CTB, comes with significant risks. Always do your thorough due diligence. If you found this breakdown of BOXL helpful, please hit the like button, subscribe for more in-depth analysis of hard-to-borrow stocks, and let us know in the comments if you have any questions or other tickers you'd like us to cover. We'll see you in the next video.